You know, even though the current US stock market crash that's happening right now is being compared to previous stock market crashes, no stock market crash is the same. Any good investor will tell you, yes, the financial market has cycles that tend to repeat themselves, but just because it happened a certain way in the past doesn't guarantee that it's going to happen the same way in the future. And investors who don't understand this are going to be making the mistake of trying to catch the bottom, right? And that's a mistake because no one knows where the bottom of the stock market will be. And then you have some investors advising people to average down, or in other words, continue buying the stock as it's falling with the assumption that the US stock market is going to rebound or eventually turn around. And this is also a mistake because, again, this is a different crash happening at a different time with a lot of different variables at play, like war, global pandemic, supply chain issues, energy crisis. So these investors who studied these crashes in history, like the Great Depression in 1929, the Black Monday crash of 1987, the dot-com crash in 2000, right? These crashes were different crashes with different variables at play. And the point I'm trying to make is that yesterday's investing experts aren't today's investing experts. And I believe a lot of people are being misled on what the best things are to be doing right now with their money during this unprecedented time. To fight inflation, the Federal Reserve is hiking interest rates at a rate not seen since the 1980s. And what this means is increased borrowing rates, all right? So this means that there's gonna be higher mortgages, higher credit card or higher interest rates on credit cards. So debts are going to be harder to pay back. It's going to take longer to pay back. You're going to see an increase in rent. You're going to see an increase in car payments. And what this is going to do is it's going to cause people to cut back on spending. And this is not only going to affect the common citizen, but it's going to affect businesses as well, right? This is where you're going to start seeing a lot of layoffs, a lot of really decrease in the labor market. And this is going to hurt the value of company stock, leading to a continued devaluation of the US stock market. Did you know seeing the effects of interest rate adjustments actually have a 12-month delay? Yeah, so the crash that we're seeing right now, right, this is from the response or the emotional response of investors moving their money around, taking their money out, putting it in different places, right? And so we haven't even seen the full crash. We're a year off from actually seeing the effects of these interest rate hikes. We could see a bearish stock market all the way into and through 2023. And if the US stock market does happen to find its bottom, there is a strong possibility that we'll see a flat market for 2 to 5 years, right? Who wants their money sitting around in stocks hoping that and praying that the stock market is going to bounce back for 2 to 5 years? So do I think it's a good time to be averaging down and buying stocks right now? Absolutely not. I do think it's a good time to be learning about the stock market and finding alternative ways to store money like precious metals, bonds, PAM accounts, and trading currency. But right now, more than ever, is a time to be working on building extra streams of income, preferably online, investing in tangible land, pooling resources together with friends and family members, looking into possibly moving abroad to a country where the American dollar is going to stretch further. People need to be budgeting like their lives depend on it, and most importantly, keeping the Most High first and seeking the kingdom above all things.